Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. A very interesting pattern is starting to develop for the Australian dollar. First of all, we have a hanging man, and then from that the rejection from 72 has now given some potential to the downside after the close on New York on Friday under 71.55. Now we have had a low of 71.17 this morning, but we can see now this trend support which comes in around 70.85 to 90. We get a break of this level that does expose the region back to 69 cents. What's in favor is the fact that the RSI is broken through the midway point, and also the MACD, if we open this up just a little bit, it's getting close to confirming a negative signal. And let's see if that trend develops into a potential downturn if we get the break of this level of 70.85 to 90. Also tomorrow, eyes on the RBA rate decision at 2:30, so that could also put in some kind of significant move if the central bank is somewhat dovish due to the corona outbreak in Victoria. So all eyes on the RBA tomorrow as well. The euro rejecting the level of 119, and also the fact that the US dollar, which measures the greenback strength against a basket of 6 major currencies, rejected off the 92 area, does put some bearish faith back into the markets. We've got an ADX nearly depleted, and also with the divergence here clearly ignited the downside move. I would like to see a little bit more evidence to the downside though, and a move under 116.90 or around that region should confirm the move back towards the target, which I'm looking clearly around 115 and reassess from there, because we could actually drop back towards the 114 region. Still need a little bit more confirmation from the technicals. Nevertheless, if the dollar index does move, then we could see the weakness return for the euro. And it would be all eyes this Friday with the non-farm payrolls, and that could be just the ticket to send the market lower. I did give some indication on Friday that dollar yen had reached its objective at 104, and from that you can see the market ignited from that level and now post a bullish outside range day that does give some projection up towards 107. In light of the pattern and also from this strong bullish candle, we could see the bulls continue to push the market until at least 107 and reassess from there. We have a gravestone doji in place for the pound, but a little bit more confirmation required to support this negative candle. We do have lacking technicals, but a break of this level, because we do need confirmation, so a break of 130.35 would be, and I believe, enough momentum to drive the market lower towards a region of 128 or down towards this region of around 127. Wait for the confirmation, because if we don't get a break of 130 or 30.35, is that we could rebound back up towards 131 to 132. And this week we've got the Bank of England's rate decision on Thursday, so it's all eyes for that, which could see a bit of a dovish tone maybe coming out from the Bank of England. Dollar CAD, well, the market rebounded off that level 133 and still has 135 in projection. Purely for the fact is that we broke above the midway point on the RSI, and the MACD is getting somewhat bullish. I still like to see this candle increase to the upside, so let's see how we start for the start of this week, and it could be somewhat bullish. There is some divergence showing in gold. Although the call may be up towards 2,000, we shouldn't discount that, but I still feel the market's whippiness after last week's $75 drop could see another type of candle and value in terms of in the market's 75, maybe 55 or somewhere around there if we get a rejection close to 2,000. Overall, though, the market needs to take out 1,900, so we're still quite a long way away, $72. But nothing really at this stage to see any real bullish momentum due to this divergence. So I'm a little bit cautious in coming out of any calls beyond 2,000. And wrapping up with oil, well, the market is weaker and it still has the potential to pull back to $36 a barrel, while the cap is still there around 41.50 to 80. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to this new week.